Let's now take you quickly across to my colleague Arun to understand what a 25-point repo rate cut could mean for the man or the woman on the street.
Well, that's right, Gautam. Well, it's a Diwali bonanza, or it's a Diwali gift by Urjit Patel to the home loan borrowers or a common man, basically. Now, from January 2015 till now, 6 rate cuts we have seen, and more than 150 basis points of rate cut we have seen. But actual transmission has not happened till now. In front of more than 150 basis points of rate cut, only 0.10 to 0.20% of rate cut has happened. So that is not actually happening. So if in case, let's assume a hypothetical situation, if after today's rate cut, if actually the banks pass on this benefit to the consumers, how will your EMIs are going to be changing from now onwards? Let's assume an example. If in case you have borrowed a 25 lakh rupees from bank for a tenure of maybe 20 years at the interest rate of 9.50%. So as of now, you will be paying close to 23,000 rupees. So this is the current scenario we'll try to understand. So for 20 years at 9.50%, you are paying 23,303 rupees. Now let's just change this interest rate from 9.5%. Let's assume that the banks are passing on the entire benefit to you, and this interest rates now is basically now at 9.25%. So what will be your next scenario there? Now, if in case the interest rate is at 9.25%, you will be paying EMI of 22,897. So how much you are saving? So you will be saving close to or more than 400 rupees on your monthly EMIs if in case this actual transmission is happening, if the rate cut happens. Now, last rate cut happened in April, and after 6 months of a gap, we are witnessing this rate cut. So actually, to be very precise, now 406 rupees you'll be saving as far as your EMI is concerned. Now, let's try to understand in very simple language how much interest rate you are paying basically, and or how much you are paying on your interest rates. Let's try to take an example as to how much you'll be saving on interest rate. Now, at the 9.50% interest rate, for the tenure of 20 years, as of now, you're paying 30,92,787. Now, this is the interest amount. That means this is your principal amount that you're supposed to pay, and this 47% is your interest amount. So, as of now, you're paying 30,92,787. Now, if we try to change this 9.50% of interest rate to 9.25%, if in case the banks actually transmits the benefit to the consumer, you'll be paying 29 lakh rupees, 95,201 rupees at interest rate of 9.25%. So, for the tenure of 20 years, that means going forward for 20 years, hypothetically, you will be saving close to 1 lakh rupees. So that will be your saving on this entire tenure of 20 years, to be very precise, 97,586. Till now, the banks have not passed any kind of benefits to the consumers after the rate cut has happened. But Economic Affairs Secretary Shaktikanta Das has tweeted and asked banks to pass it on the benefits to the consumers. Now, if in case even the portion of this rate cut is being passed to the consumers, that would be a real Diwali gift to the consumers, or Diwali bonanza to the consumers. Gautam?
Just tell me something, isn't it a smarter thing to do is to ask the banks to reduce the tenure of the loan rather than the EMI?
Well, Gautam, it completely depends upon you that for how long you want your tenure. You just don't take loan on the basis of your EMI or your tenure, but it all depends on your pocket. If in case your pocket allows you to pay lower interest rate, but for a longer duration, you can go ahead with 30-year loan as well. So all this equation completely depends on you, on your pocket, that you want 10-year loan, 15-year loan, 20-year loan, or 30-year loan. It's all up to you. If in case you want to go ahead with the EMI portion, you can extend your tenure to 30 years because that's the last option you can have. So it all completely depends upon you. But now banks have to play their role as to how can they help you as far as reducing the EMIs are concerned.
Oh yes, definitely. Thanks a lot for joining us, Arun.